$400,000 spent. Nothing earned. A car, a wing on the house, 3 weeks somewhere warm. That was 1 year in the life of the man in the good suit. The return he filed for it says he earned nothing. Not nothing much. Nothing. $0 of income, and the IRS agrees with him. He did not hide it. There is no offshore account in this story, and nobody breaks a law in it. No payday, no tax. Which leaves one question: where did the money come from? You earn $62,000 a year. You know it to the dollar, but you have never once held it. 12,000 of it left before you saw it, taken at the door on the way in. That is just how it is collected. Money that arrives as pay gets counted on arrival. Yours arrives as pay, every month for 40 years. His has never arrived at all. Look at what the two of them actually own. You own hours, roughly 2,000 of them a year, and you sell them to one buyer at a fixed price. When they are sold, they are gone, and you make more the only way anybody makes more hours, which is by staying alive. He owns things, shares in companies, 4 buildings, land at the edge of town he has never walked on, $12 million of things, and not one of them is an hour. Things do not have to be sold to be useful. Everything else in this film comes out of that one sentence. Start with the car. $32,000, grey, nothing special. To put $32,000 in your hand, your employer has to pay out about $42,000 because the last dollars you earn are taxed hardest. $42,000 at what you make is 1,400 hours. 8 months. You paid for that car with 8 months of your life, and you will drive it to the job that pays for the next one. He buys the same car on the same afternoon at the same dealer. He does not sell a single share to do it. He borrows $32,000 against the shares, and the shares stay exactly where they are, still his, still growing. The car costs him one signature and $1,900 a year in interest. Same car, same day. One of them paid with 8 months, the other paid with a signature. So how does a bank lend against something he has not sold? Because somebody else has already priced it for him. That is what makes a thing here. It is anything a bank will lend against without asking what you do for a living. Shares in a company, a building with tenants in it, land. What they have in common is that somebody else will value them for you today in public, and that valuation is good enough to borrow on. Your hours are not a thing. Nobody publishes a price for them. There is no market in what you will be worth next April. Here is the part that is easy to miss. You could have borrowed 2. You would have been offered 8%. He was offered 6. Same bank, same building. Marguerite signs both loans that afternoon and thinks nothing of either. 2 points does not sound like much, and at this size it is not. Hold on to it anyway. The gap is not favoritism, and it is not a secret handshake. You pledged your future paychecks, which exist only as long as you keep showing up. He pledged shares he already owns, which the bank can take in an afternoon. The price of money depends on what you already have, and it gets further apart every time you need it more. Now a house. You are allowed to borrow about 4 times what you earn, and not $1 more, because the bank is guessing at how long you will stay employable. 4 times $62,000 is $248,000, and that is the whole of it, forever, unless the job changes. Your ceiling is a guess about your future. He is allowed to borrow against half of what he owns, right now, today. $6 million against things he has never sold. His ceiling is a fact about his present. Yours goes up when you get a raise. His goes up while he sleeps. By now you are asking the obvious question, and it is the right one. A loan has to be paid back. Yes, it does. He pays it back with another loan. That sounds like the beginning of a disaster, and for most people it would be. It is not for him for exactly one reason. Last year his things went up by $960,000. His loans cost him $24,000. He is not living on his money. He is living on the gap between what his things earned and what his debt cost, and the things are never touched. There has been a number in the corner of this film since the car, and it has been going up the whole time. It is the tax he owes. His things cost him $3 million years ago. They are worth $12 million now. $9 million of that is gain, and the bill on it, if it were ever collected, would be around $2 million. It has never been collected. Not because he is hiding, because of when the tax is allowed to look. There is a word for the moment a gain becomes real enough to tax. Realize. You realize a gain when you sell. Until you sell, the IRS does not see a dollar of it, no matter how large the number in the corner gets. It is not income. It is not anything. He has been rich for 30 years, and he has never realized a thing in his life. He adds a wing to the house. $200,000, borrowed, against the same shares he has never touched. Meanwhile, you replace a boiler, $4,000, and you move it onto a credit card at 22%, because the money is not there in February. Both of you just borrowed. One of you borrowed at 6 against something he owns. The other borrowed at 22 against a promise to keep working. 6 years pass in about 4 seconds here, and almost nothing changes about how either of them lives. You get a raise, which mostly goes to the boiler. He borrows against a bigger number every time, and the bigger the number gets, the more he can borrow against it. And the tax he has never paid on the gain has crossed $3 million, sitting there, growing, entirely legal, entirely uncollected, waiting for a sale that is not going to come. One of the 4 buildings has a fox in it. Not this fox, a different one, a cousin, 2 towns over. He pays $1,400 on the first of the month, and he has never met the man who owns it. That rent does not sit in a vault. It services the loans, the car, the wing, the school fees. The money that lets the lion never sell anything is arriving every month from people who are selling their hours to get it. Nobody in that arrangement is doing anything wrong. It is just worth knowing which direction it runs. School for the cub, $40,000 a year, and he borrows that too. The school at the end of your road is free, and it is paid for out of what is left of everybody's pay, including yours. Here is the quiet part. The cub is not being taught anything about money in that school. He does not need to be. He is not going to inherit a lesson. He is going to inherit a position. This is the point where the film would be lying if it stopped. There is one way this comes apart, and it is brutal. If his things fall 40%, the loans do not fall with them. The lender calls, wants more collateral by Friday, and if he cannot post it, he has to sell. Selling is the one thing he has spent 30 years not doing. Vance borrowed against everything he owned for 11 years and lost all of it in a single quarter, because he was still borrowing when the market turned. Borrowing against what you own is a bet that what you own keeps going up. Mostly they do. That is not a promise about the future, and nobody should read it as one. It is a description of what has happened often enough that a whole way of living has been built on top of it. He is not clever. He is early, and he is holding something the bank will lend against. The rest is paperwork. He is old now. The buying stops on its own. The wing is built, the cub is grown, there is nowhere left to put anything. What is left is the debt, which by now is $3 million, and the things, which are worth $22 million. And the number in the corner, which has quietly reached $4.5 million of tax that has never once been paid. Someday you think the bill arrives. Someone has to sell something eventually. If you're enjoying this, a quick subscribe means you won't miss the next one. Now back to it. The cub visits on a Sunday. They do not talk about any of this. The old lion never sits him down and explains it, because there is nothing to explain and nothing to hand over except the thing itself. The deed does the teaching. Whatever the cub does for the rest of his life, he will be doing it from a position that took his father 40 years and will take him no time at all. He dies in his sleep in February, and in the United States, this is what happens to the $4.5 million. Nothing. When the cub inherits the shares, their cost is reset to what they are worth on the day of the death. 22 million in, 22 million counted. The $19 million of gain that was never sold is now, legally, a gain that never happened. Not deferred. Not owed later. Gone. A bill does arrive. Not that one. The estate itself is worth more than the law lets a person hand over untouched, and above $15 million the government takes 40 cents of every dollar. $7 million over the line, $2.8 million paid in full by the estate. That is a real tax, and it is the one people argue about on television. It is also the smaller of the two. The bigger one, $4.5 million on 30 years of gain, was never a bill at all. Nobody argued about it because nobody ever wrote it down. The transfer takes 4 minutes. Inez at the county office stamps it, files it, and calls the next number. There is no moment in that room where anybody decides anything, and nobody in it could tell you whose money just stopped existing. The rule is older than everyone in the building. It has a name and a number, and it is 1 line long. Nothing was ever decided about your $12,000 a year either. It came off at the door 480 times by a rule just as short. You die too, eventually, and the numbers on your side are much simpler. 40 years of pay, every dollar of it counted on the day it arrived. $12,000 a year, gone at the door, $480,000 across a working life. What is left is the house, most of it, and a car with 190,000 miles on it. That is not a failure. That is what the system does with ours. There is one thing on your side. A market cannot take your house on a Friday. Nobody sits watching a number all day and decides that your collateral has fallen below a line. Your version of that call comes slower, and it comes from an employer, not a bank, and you will see it coming for months. That is a real difference, and it is worth having. It is just not the same thing as owning the building. Somewhere tonight, a man in a good suit is buying a car. He is not selling anything to do it. He signs a page, drives it home, and the things he owns keep going up behind him in the dark. Somewhere else, a fox is working the 8 months that the same car costs him, and both of them are obeying every rule there is. One of them is paying with money, the other is paying with time. Only one of those two things comes back. If you liked this one, hit like and subscribe. Got a topic you want us to break down? Drop it in the comments. We're here to answer the simple question behind everything. Why money?